Happy Hump Day, everybody. Welcome to your Wednesday edition of the TraderMerlin Show. I'm sure some of you feeling a little bit of heart palpitations with what's going on in the crypto space and all the talk, and it's basically the forefront of everyone's discussions right now, but do not worry, it is absolutely a normal thing to have what happens. It's just the moves are so exaggerated that it draws all the attention. Now, what I want to make sure we don't do today, and I've gotten complaints from some people saying, look, you've taken the show way too crypto, which is totally fine and respectable because I do want to pay a fair amount of attention to all the different asset classes. So today I'm going to actually focus on a more specific topic, which is this stock analysis. I have a whole bunch of specific charts that have come in, or questions about specific charts that I want to get to because I feel like I've kind of been neglecting that area. Now, don't fret. We will at some point, probably near the end of the show, go into whatever we need to with regards to crypto. I'll explain why, if someone is in your face telling you that crypto is dead, that you should just politely give them the middle finger and say you don't understand how markets operate, okay? This is actually a tremendous buying opportunity if you believe, as I do and others, that there is a rising ecosystem out there. So we'll talk a lot about that as it goes. I see we've got a lot of new people here with us today, so shout out to all my regulars. And to Ron, good to have you with us live. I see also we've got a couple others. George K, new as well. So if you are new, and a few others, I see Paul McVeigh saying finally made it live. If you are new, hit that subscribe button, and hopefully you'll see more content from me as we go forward. So thanks everybody for joining us from all different parts of the country. Looking forward to a great show today. Okay, and for those that are new, if you have a question directly to me or something you want analyzed, just start with a bunch of question marks because a lot of times the chat starts to get going here and I end up scrolling back and forth extensively, and I don't want to waste your time or mine by trying to find comments and questions. Just put question marks before it, and I'll get to those right away. All right, so let's start off with the good stuff, which is market analysis. And there was so much to talk about today. We could, without even having one listener question, I could spend an entire couple-hour show just breaking down what happened in our overall market indexes. So I am going to talk about stock analysis, but again, shout out to everybody who's doing the May challenge. If you haven't done one yet, think about what you want to do for June. I will start a whole new page in June, which is basically something that you want to do for 30 days straight, every single day. If you just want to do 5 minutes a day, great. An hour a day, great. Or some exercise thing, do it. Find something good to do, and we will hopefully improve our lives for the better. So that's the first piece there. Let's get that out of the way. Now, before I go to the first listener question, I'm actually just going to dive right into, I'll start with the top 7, kind of run through what happened in the markets overall, and then I'll go to these listener questions. All right, so let's start off by taking a peek at the bottom, which clearly there's nothing that's going to beat the worst out of crypto today. Crypto was ugly, pretty bad, and you see this big drop. You guys, we drew this yesterday. I think it was yesterday, maybe even the day before. And I actually thought it was kind of interesting because someone pointed out, I think it was yesterday, said, do you see the head and shoulders pattern here? And you guys notice that all we did was from the top of that peak that we saw on let me get the right date for you, on the 14th of April, all the way to the neckline, which is this diagonal black line here, that's called a measuring object. And all I did was move it to where we broke, and notice where it went to. I did not think that we would get down there today. I said certainly it's a possibility. I mean, I thought it would take a few days, maybe a couple weeks. If it did get that low, man, we fell all the way down to almost exactly that measuring object on Bitcoin. Pretty impressive. So for anybody out there that was eyeballing that 30,000 level or something close to that, amazing buying opportunity. It did not last long. It came smashing in there, bounced off it, and Brendan says he called it. I hope that you managed to buy into that one. Herbert is in Zimbabwe. Well, welcome, Herbert, from Zimbabwe. Hope you're having a great day down there in the southern hemisphere. All right, so that's your worst performer. And again, we'll walk through some of the other ones. Bitcoin actually isn't even the worst. There are some out there that got 30-40% haircuts today. But we'll analyze this more, and I'll tell you why you should just give those people who are saying that crypto is dead the middle finger in a little bit. Now, let's move on up the chart here. You can see here we've got crude oil. Now, crude oil is actually a question that came through from a viewer, so I'm going to circle back here. But it was a rough day for crude oil. Came right back down to that upward trend line that we've had drawn on there for a week or two. Still looks bullish to me, but it's right at kind of a decision moment that you have to, wonder, am I going to want to jump ship here on this crude oil or maybe even buy some? So we'll look at that when I get to my listener question, just running through our top 7. That was down 3.27%. And by the way, Bitcoin, as we speak, down 11.38%. in the last 24 hours. We start moving up the ladder here. Indexes, Russell 2000. I don't feel like anything has changed here with the Russell, right? You really have the story of two trends. And I'll map out here what I'm talking about with the story of two trends on the Russell. Let's go from, you can take this low that started back in September and you go all the way up to the peak here. Phenomenal move, right? You got about a half a year, you're looking at 65% gain. Great by anybody's standards. But what's frustrating for anybody who's looking at more bullish market trends is since February, that's 3 months of pretty much just sideways chop action in the Russell 2000. Now, some of the other indexes look this way as well. We'll look at those in just a second. But really, this is not a reassuring sign for market strength, especially given all of the stimulation coming into the market with COVID relief and all these other monetary policies changing to help our economy get back on track. It's not really that encouraging to see this chart look like this, even though many feel the next bull market is right around the corner. Now, I'll move up the ladder. So that was the Russell down 0.73%, S&P 500, totally different formation, right? We talked about this one the other day as being more of a broadening formation. Some call it a megaphone formation, which it still isn't really helping me much. It's really just kind of showing extreme volatility and chop, which is normal, but I don't see any great plays on these except for maybe a bullish move tomorrow based out of the candle formation. You guys can see today we have a hammer formation, came down into, I'll say loosely, an area of demand. It's not really great demand, but on the S&P, we came ripping down, ended up right near the high. That's actually a fairly bullish sign for the market going forward, at least for tomorrow, but that may change by the end of the day. Now we look at the 10-year, not really much to speak of here with regards to yield, really just traversing sideways. NASDAQ though, this one also has a great hammer formation. Technology got wrecked today, but all of a sudden came bouncing right back. And a lot of the stocks that people have asked for are actually asking for tech companies. So we'll look at a lot of those here in just a second. So NASDAQ just slightly up on the day. And then finally, the last one, which of course, as markets get into a little bit of turmoil, gold tends to do rather well. What's noteworthy here today is yesterday, we had this small spinning top formation on the GC futures. Today, you have a similar pattern, but it's called a long-legged doji. Just this really long topping tail and bottoming tail on it, which just shows you there's a lot of emotion there, but ultimately, there was no real direction in price. It's a big sign of indecision. So we've got two really big indecision days for gold. Les says, couldn't the Russell trade be a bull flag? No, and here's why. You can make the argument that it's a bull flag, but the problem is that the flag has gone on too long. And there usually is some people put a date, a timeline on it saying here's how long it can go before it's no longer a bullish flag formation. It's just, to me, this is now just a big extended period of consolidation. So I personally wouldn't call it a flag. You could if you wanted to, but again, that's just kind of splitting hairs. The bottom line is, what is it telling us, right, Les? That chart is telling us that for the better part of 3 months, it has really been in this sideways range compared to, look at the 6 months before, right, which was nothing but bullish amazingness, and now all of a sudden we have this transition. So the big question ultimately will be, what do we do with the Russell and other indexes that look like this, or markets or assets or whatever they are? And the best thing to do is really one of three things. Number one, you outline those ranges, that high and that low, and you say, well, shoot, for the 3 months, it hasn't broken out of that range. I will buy long at the bottom and I'll short at the top of that range and play the range. Best way to do that is with spreads, using options. The second thing you could do is just not do anything, right? Just sit there and be inactive. The third is simply to wait for it to pop out above that upper part or break down below it and wait for the breakout trade. So to me, these are your three options for it. I think that trading the range is probably a pretty good thing. You do have Russell futures. You can do Russell futures. You can do Russell options as well. And, depending on what your strategies are, there's multiple times a week you could be writing call option or spread options on this and collecting some premium as long as it continues to go sideways. So to me, this is actually a great chart. Even though it looks like garbage, it's a great opportunity for anybody who's into spreads. Let's see what is here. It's crying iron condor, the Russell. Yes, exactly. And I do believe so as well. Darren, I don't know if I missed it. Let's see. Darren says, where is a good place to research? Well, to research what are we asking about, Darren? Oh, miners? Okay, sorry, that's for Brendan. I'll leave that one for Brendan. Okay, let's go to my first question here, which is a pretty easy one for me. Leslie says, can you analyze Riot? Okay, so with regards to Riot blockchain, there are a few competitors in this space and essentially miners for cryptocurrencies and digital assets, and doesn't necessarily mean they're Bitcoin, could be other proof of work companies that they might be mining for, or maybe even staking. Who knows what these companies are actually doing behind the door. I personally, I've said this many times, without even looking at the chart, I'm not that strong or positive on the mining space. I just believe that more companies, especially because Elon Musk really drawing it to the public spotlight about the energy consumption of Bitcoin, we can have arguments back and forth about whether it uses too much or too little or what the value is. Who cares? It shed a very negative light on Bitcoin last week, and these miners, I think, will be under a lot of pressure simply because companies will be looking to go to proof of stake and migrating away from proof of work. Remember, with proof of work, that's incredibly resource intensive. Mining equipment, and I say miners, I'm talking about chips, right? A little, basically a box full of semiconductors just processing data. That's really all it is, like a CPU that does nothing but mine data. And then you can have the other side of this, which is proof of stake, which is I could do it from my phone. I could do it from anything. It doesn't require really any power, very, very, very little power, because you're not competing to solve blocks of data. You're a validator, not a miner. I know that might be over some people's heads. But that said, I wanted to start there because to me, I personally wouldn't be getting into that space with Riot blockchain for that reason. That said, there's plenty of others that would. So let's go for the benefit of the doubt here and say, what would this look like? Maybe what are some of the competitors or areas that you want to jump in? So check out RIOT. Here's Riot blockchain. And obviously this has been impacted recently because as this mining company is mining cryptocurrencies, and let's say they mine Bitcoin, well, the value of Bitcoin has been pretty much chopped in half over the past couple of weeks. Therefore, the rewards, the money that they get from solving a block of data has essentially been cut in half as well. So if their profits for Riot are going to come from the cryptocurrencies that they mine, well, Riot is now, they basically just got a 50% haircut on their earnings. It's not looking good for these types of companies. Now, if I look at this pure technical, you could make the argument that there's some nice areas down here right around, let's call it 18, maybe 1775, where you might think about buying some. But personally, I just think this chart looks real weak. It looks to me, when I look at the price action of Riot since its inception, it almost looks like a pump and dump, right? It was going sideways, and then all of a sudden had two really big thrust moves to the upside, and really has just been dropping ever since. So, Leslie, I'm really not that optimistic on Riot. I'll show you a couple competitors which may be better options, but you'll notice that the pattern here is pretty much the same with all of these. So here is Riot. Let's check out Mara, M-A-R-A. That's Marathon Digital Holdings. And you notice it's almost identical, right? Similar pattern, down around 20, but it's also coming into this area of demand. And now let me see if I can just draw some lines on here. I'm going to just loosely do this for sake of time. You're kind of coming into that area of demand right now, depending how deep in that zone you wanted to go. But you have to believe, if you're buying this, that you're going to get a spike in cryptocurrencies, which you probably will. I think you'll get a bounce out of this. And also that we will see companies stay with a proof of work structure versus proof of stake. And I'm not that confident there. Another one is Hive Blockchain. That's, if I remember correctly, HVBTF, if I'm not mistaken. There's Hive Blockchain. This is a much cheaper one, but you'll notice the chart pattern looks almost identical. These three companies pretty much spot on with regards to their trajectory. Another one out there is CAN, C-A-N. Right, this one even more of a breakdown, although it's not really coming into demand. Demand on this one's right around $5. And then lastly, there's one that was really run by McAfee. I would say it's pumped and dumped by John McAfee, MGTI. This is one that a while back was the big darling stock in that space, and you can see now trading at almost 5 cents. I think technically, from any technical analysis, you get John Bollinger in here, or Martin Pring, or anybody who's in a technical analysis, and they would all say, probably want to stay away from these ones just because they're looking weaker and weaker and weaker. And until they prove that the bottom is put in, it's a gamble to take those trades. So I'd be very careful about that going forward. All right, let's see what else do I got. China made some crypto. Well, China's always making crypto news. Margin crypto traders are wiped out. Unbelievable. Yep, and rightfully so. You know, you get overly leveraged in an asset that moves as much as crypto does. You know, shame on you. That's a dangerous thing to be doing. But you know, I know a lot of people are out there leveraging themselves to the hilt right now. Let's get that at the end of the show. We talk about leveraging and margin and price action moves. I want to make sure I get to all my sent-in viewer questions like Leslie so I don't get in trouble here and get hate mail from me not going over these questions. So, Leslie, that's my take on Riot and also some of its competitors, you know, Kane and MGTI. You've got High Blockchain and Marathon Digital Holdings. There are a few others, but I'm just not that bullish on it. I know some people here might be. It's okay if you are. Again, these are just my opinions, so I don't want to ruffle anybody's feathers, but I'm just not that bullish on it right now. What else we got? Lee says, given the chip shortage, what do you think about NVIDIA? Gosh, I wish I had Larry Jacobson on the show today because this is his baby. He loves looking at NVIDIA from the fundamental perspective. Now, if I look at it from a technical point of view here, you know, I don't get a lot of confidence in NVIDIA. My gut tells me NVIDIA is going to be fine, but you know, my gut has no place in trading. It's just an opinion. Looking at the price action since September, have we really done much? The answer is yes. Look at the range. I'll go from peak to trough here, just what we've seen since March. We were down at 463 on NVIDIA, and within a couple of weeks, we spiked all the way up to a lofty price of 648. I mean, we're talking almost $200 of opportunity here. So yes, there is opportunity, but is there any real discernible sense of direction that you could bank on at this moment in time? And I think that's the ultimate thing, right? For us, you know, you could have a love affair with NVIDIA. Great, I could care less. Is there a direction, a trend, or something that you could bank on that's going to give you high probability? To me, that's the most important piece when you're looking at analyzing any of these ticker symbols, right? So what do we get out of NVIDIA? Well, certainly you've got some dramatic swings, some dramatic volatility, but right now my bias is going to be to the short side simply because that's what the trend has been for the past month. Well, the funny thing is, the month before it was nothing but bullish. The month before that, it was nothing but bearish. So you've got like a month of bearish, a month of bullish, a month of bearish, and you know, time those properly, and you're going to do great. But I just don't see this as a high probability trade for me personally. So, Lee, I'm not a huge fan of NVIDIA just because I don't have anything to hang my hat on with regards to a demand zone. I don't see any real like overwhelming discernible trend on NVIDIA as well. Now let's take a look at some of the competition because obviously there's chip makers are in the news with the chip shortage going on. Let's look at what used to be the big daddy of them all, Intel. All right, at least Intel, I mean, it's a very ugly chart. Let's be honest. This is an ugly chart, big gaps all over the place. But, you know, you're in a volatile industry and Intel is playing catch up right now to AMD, surprisingly. So I look at this price chart here. I've got a huge unfilled gap that starts at about 62.50 way up here. And I'll do the visuals for you. Let me get that dragger out. So yeah, about 62.50, and then we gap all the way down to about 59.25. So to me, that unfilled gap will probably fill at some point, and we are right now coming into an area where I would expect it to bounce, which is right around 53.50. So if I had to choose between NVIDIA and Intel based purely off technicals, nothing to do with their chips, their products, or anything like that, just off the technicals, I'd actually be more inclined to buy this drop on Intel than I would on NVIDIA, even though I believe NVIDIA is the better company going forward from their positioning. Another one, AMD. Okay, AMD I think is actually looking the worst. And why do I say the worst? Well, it's holding this line right here. Let's go down to these lows. Actually, just tiptoed below it. It's at a very interesting point, right around 73.71. You guys can see that line that I drew there. There is an unfilled gap, which I will outline here with this nice yellow box. This is an unfilled area that has not closed yet, and my guess is it's going to close that. So it's been making lower highs since January of 2021. It's been making relatively the same lows. That essentially starts to look like a descending triangle. I know some of you are going to type in, hey, it looks like a head and shoulders formation. It absolutely does. And I'll show you that one here. I'll apologize because my drawing tool I have with a specific set of data on it, and I'll explain here in a second. But there's your, let's see, stay in drawing mode. One sec. Let me go out of snap mode, and I'll go stay in drawing mode, just so I can draw up this head and shoulders for you pattern and see what you guys think. So we could make arguments that this could go here or it could go there. It doesn't really matter, but I'll put it here just for better looking artistry. And then there's your head, your shoulder goes all the way up from those lows at 73.71 to right around 90, and then comes back down, and here we are sitting at it right now. That is a head and shoulders pattern. And the question for everybody is, well, if it does break here and I get a close down below that line, which we did just a couple days ago, can we do the same thing that we did on the Bitcoin price chart yesterday and use this as a measuring object? So let me escape out of that. And here is where it's forecasting roughly where this chart of AMD would go. Now, of course, I think AMD might have a say in this matter if it dropped all the way down to this price, but there's your price chart. It's telling us that with that measuring object, if you wanted to have a target, it's actually saying $48 would be your target. Now, I gotta chime in on that one because I don't think that you're gonna knife straight through to 48 like we saw with Bitcoin today. There obviously are some areas over here, one in particular that I like is right around $55 even, that I would expect it to stall and potentially have a bounce out of. So out of these three that we've looked at, Lee, we looked at NVIDIA. I think that NVIDIA looks pretty poor. I think that AMD gives you some potential trade setups here from a short opportunity. And then ultimately, if I look at the competition, I actually like Intel the best as a buying opportunity. Now, here's the challenge for all of us. If I'm going out there and I'm trying to find the sharpest tool in the shed with regards to semiconductors, I could go and look at I've got KLA 10 Core, I've got Maxim Semiconductors, I got all these different companies out there to choose from. I could spend my time and whittle through them all and try to find the best one. If you don't have that time, whether that's, or maybe you lack the skill in technical analysis or fundamental analysis, then the easy solution is to go with an ETF, which I'm going to talk a lot about today, actually, some of these ETFs. And I would look at SMH. So SMH is a semiconductor ETF, and you can see that overall, this thing's been on a monster uptrend. It's been trending sideways for the better part of 3 or 4 months, but all in all, still looks really good. So if you were uncertain about maybe buying NVIDIA or AMD or Intel, this might be an option for you. It's one of the more liquid ones out there as far as a semiconductor ETF, and I just wanted to throw that out there because I think it's easier for some people to look at those versus trying to pinpoint everything specifically. All right, let me look at the questions here real quick. What are your thoughts of Rolls-Royce and Zoom? Zoom. Honestly, I could not be more bearish on Zoom. I think Zoom is really terrible. I think this got too much competition, but right now they're entrenched. They're doing good. Okay, so let me go one more. I got a few more here, and then I'll get to all your listener questions. Oh, I should have had. I'm gonna have my drink tomorrow, right? Because remember, John Rowland's gonna be the guest tomorrow, and we're talking about the life of a floor trader as he traded on the floor of the New York Mercantile Exchange as an oil and natural gas trader. So we're gonna have some fun tomorrow. But I should have had a drink with me today anyway, just because of the way the markets have moved. All right. So what do I got? Next question is gonna be from Tomas. Thomas says, "I'd like to buy some EV stocks. How about NIO?" Okay. Obviously, this was a huge segment of the market with regards to the boom-bust cycle a few months back. Is it still there? Is there opportunity? I believe absolutely that there is. I think that there's no doubt we will be going further down that road in the EV space. But I think much like the discussion we just had on semiconductors, is it saying I want to find, is NIO the one? Or is it going to be Rivian? Or is it going to be, which company is it going to be? Or do I maybe look at ETF? So let's start by looking at NIO, which I know many of you like. You like the NIO chart. NIO's chart, I'd say, looks very much like some of these blockchain ETFs and mining ETFs or companies we looked at. It's ugly. For me, I'm a big fan of identifying gaps on a price chart and anticipating their fill. Well, there's one right here that's just screaming at me on NIO. And that, for those that might be listening to podcasts, and by the way, thank you to all the podcasters that do listen, that gap is right around, call it $24, and goes all the way down to, let's call it $21.50. So you've got that gap that I kind of feel will fill. It's a magnet to price. That said, you also have an area that's right above that, a nice little area of demand, where started this last gigantic rally to the upside in NIO, and that goes all the way back into October of 2019, which starts at right around 26.57. So I think you have some arguments for buy points on NIO. Now for Thomas, here's my thinking. And again, this is just my opinion. I guess I'm supposed to say this is not supposed to be construed as financial advice, but because I'm talking one to many, it's okay. You could buy NIO right now and take on all the risk that you're catching that falling knife at the exact perfect time, right? It has certainly been getting weaker and weaker and weaker. Yes, it had an update today with regards to its candle, but it was still a gap down on NEO. I'm not liking the trend that I've seen since 2021. I would not be buying NEO. I would not buy it. What I would be doing, if you felt confident and you wanted to buy NEO, and again, do your own analysis, fundamentals, technicals, whatever. If you said NEO was one that I wanted to buy, I would be out there looking at selling puts at, let's say, $26, maybe 27, somewhere in that ballpark, or puts at this level a little bit lower, which is, in the 24 range to all the way down to, let's say, 22. By doing that, you would be collecting premium, and I would probably do these weekly, right? Just keep selling them weekly, collect more. You're not going to get a lot premium for the weeklies, but you're going to be doing it every week if there is weeklies on NEO. So I'd be selling put options on NEO, collecting premium, and if it did get down to those levels, then not only would I buy it at that price, but I would actually essentially be getting a lower cost basis because of the premium I'd collected on my NEO. Now, that was NEO. Obviously, there's a lot of different companies out there like NKLA. We talked about nickel a long time ago, and I think you guys, for those that are longtime viewers of this show, of course I started this channel back in February of 2020. When this thing was trading up at the $80, $90 range, some of you that are longtime veterans of this program will remember me going, this thing is garbage. It's going down. I think I even made some bets on people saying this thing is going down. It's a pump and dump, right? And it ultimately crashed even lower than I thought it was going to go. But we were talking about it coming all the way back down into the teen range. Right now you're at $12.90 on it. This to me is still a gamble. I just don't trust Nikola at this point, especially given the talk track that the CEO has given about mergers and deals with other companies. Could they be something? Yes, they absolutely could. Then you have Tesla. Here's your old TSLA. Given the fact that you've got some people publicly announcing their gigantic short positions in Tesla, that created a little bit of fear out there, in my opinion. Today you saw it down about 2.21%, but you'll notice the distance here between zones. Right now, let's call it 560 was kind of where it was bouncing off of. Once it falls from 560, there's only three numbers that stand out. I've got 495 as a potential price point. I've got a gap right at the origin of the gap at 442. And then I'm talking all the way back down here to 405. So those are three big levels for Tesla. It just doesn't look good right now. No matter what you think about Elon Musk, whether you think he's the greatest person in the world or just the biggest cryptocurrency shiller on the planet, who cares? Price charts of this don't lie, and it's starting to get weaker and weaker. If we get below this low that is established about a month ago, and I'll tell you exactly what number that is, which is 539.49. If we get below that, I think you're going to have a clear shot to 500. After that, I think you could get real quick down to that 405 mark. So I'm not bullish on either of these two companies. That said, again, what could we do to mitigate our risk of just buying one company like NEO or like Tesla or Nikola or anything like that? ETFs are the way to go. Now, there's a few ETFs out there that you might want to think about. The challenge is most of these ETFs aren't exactly in the EV space. They have a portfolio of different ones. So cars, for example. Cars is supposed to be representing electric vehicles, but it doesn't really have exposure to a lot of the specific car makers. It has a lot to do with Google, has a lot to do with NVIDIA, Microsoft, companies that are in the AI space behind driverless cars, it seems like. So you could look and check out different portfolio allocations here. What I highly recommend, let me run through here, but I highly recommend you go and look at these different ETFs if you're thinking about any of them. Another one is IDRV. That's a pretty popular one. Again, really just sideways for the better part of the last few months. The one that I like the best personally is BATT. This is lithium ion and batteries. Now, I'm not liking the chart pattern right now, but at least it's hesitating. And I think that going forward, it's kind of the general consensus is that lithium and the batteries are going to be the real challenge. So I think you'll start to see those companies do rather well with regards to earnings. Another one that's competing in that space with BATT is LIT. And there's the chart, and it looks almost identical. So what can you do to really help manage your risk on these? Well, if you look at, if you go to ETF.com and you type in different databases or different ticker symbols. So for example, I'll show you the first one we looked at, which is cars, right? And you're thinking, okay, cars, it's an ETF, electric vehicles and future mobility. Great. So you can scroll through here. It'll tell you all the different stuff that's in it and how it's allocated. I like to scroll down here and notice the number one holdings is Google. Then you got BMW and Daimler Chrysler. Those are the top three holdings. From there you go NVIDIA, Southern Copper, Texas Instruments, Analog Devices, AMD. I've got to go through 8 companies before I see the first car company, which is NIO. So to me, if I really wanted to buy a car ETF, this is not the way I would be going. There's other ones out there that might give you more exposure to vehicles and car ETFs like that. Let's look at a company like BATT, just to give you an example of the different one. This has a lot more diversity and a lot of staying away from the big names, right? I think a lot of people look at the big names and they go, oh, well, it's got the Google, it's got the Amazon, got Microsoft, whatever the case may be. Most of these are fairly small. So you notice that it's got Tesla, BYD, and NIO as its top 5 holdings. Those 3 are pretty big electric vehicle companies. You also have Contemporary, I don't know what that one is, BHP, so now you're starting to get materials for batteries, and a bunch of other chemical companies. So do yourself a favor if you are looking at this, Thomas, and saying, hey, I want to buy some EV stocks, check out an ETF. I think you'll be safer that way from a diversification perspective, because I still feel it's a discovery process. It's a nascent industry. Obviously, Tesla has a huge competitive head start, but I do believe in a few years there will be a ton of competition, just like we have in the normal auto space, like Ford and Honda and GM and Chevy and all these. I think you'll have a similar competition for Tesla going forward, and I think that could be challenging, trying to pick a specific car company that's going to be the one to lead them all. ETFs help save that problem. Yeah, China's economy is not a lot of economies right now, Naum, I think are challenged because we have to look at what information is real, right? What information are they presenting us that might, be valid for the markets going forward? I don't know. I don't trust the data coming out of China. But I also know that China may have some issues. Brendan says Musk is a crook. I don't know if he's a crook. I wouldn't call him a crook. Is he a little shady with some of the things he does? Sure. But, when you're the second richest man in the world, go for it. Do what you can. All right. I got a couple more here. And this, I talked about this at the beginning of the program. I think we might dive into it. Ethan was saying, been watching that triangle you outlined on oil. Is this the day to short? Great question. And it's a question that you have to answer yourself. All I can do is look at the analysis here on the price chart and say, well, what is it telling me? Right? What are my thoughts on crude oil? Well, they haven't changed. We still have an uptrend that you can see by that upward sloping line that goes back into late January of 2021, but it clearly is showing the interest in the buyers to buy at higher prices and push it up. Then, of course, we have that horizontal line across the top at 66.80, which is more or less the ceiling where it just really hasn't been able to close above that price. So I think that if we look at this price chart, Ethan, right now and today you actually had it down below this trend line, but it bounced back up and closed right at it. So for me, one of the rules is if I'm doing this type of analysis, I need it to close below this line. And to be sure, because it's so strong, you guys, let me zoom out a hair here. Because this trend has been so strong since April of last year, I would be very cautious about shorting crude oil. So instead of just going short on a close below this trend line, I would actually be drawing a line more horizontally like this and saying I needed to start to make new lows. I needed to get below $60.50. Therefore, it's telling me that the buyers have relented. The buyers are no longer pushing as much, and therefore it may be turning. And again, it's a may. We don't know that it's going to be turning. It's just you start to see the battle between the buyers and sellers changing pace. At this point, the buyers are winning. But if we can start to make some new lows, and that makes me feel like the sellers are stepping in, maybe taking some profits in crude oil, and we start to see that thing drop. So it's a little bit. Thank you. I'm sorry. I'm over here ranting away. Thanks, Miles. Sorry, guys. Thanks, Sue. So there you go. I'll rehash it, but you guys can see that upward trend line. You notice this big, ugly red candle today. We're down 3.27%, but it closed right at it. Okay. Yeah. Brendan says, "Where's the growth going to come from?" Good point. I don't know. Could it be a shortage issue, pipeline malfunction yet again, or another ransomware type of event? Could it be a conflict in the Middle East? I don't know where it's going to come from. All I can say is the price pattern right now, for whatever reason, has been very strong. And, I think that is just due to more people getting back out and driving and moving across the country, etc. So I think that's part of the catalyst. But, realistically, where do we think that this thing is going to go? You want me to explain it again with the chart showing? Damn it, Tibor. Okay, fine. Well, I don't think I need too much explaining. I think you guys probably had the visual in your head of you got this uptrend line, but it's just not making new lows. So that line that I drew here at 60, 67, that to me would be proof that this is making some new lows. If we weigh the other side of this and put on our overly bullish hats, let's throw on the weekly time frame and say, well, where do I think it's going to go if it does break this upper line at 66.80? Well, I mean, the clear obvious choice is a level right here, right around 72 bucks, right? Brendan says crude is going over 80. It very well could, but I see that there's going to be a challenge at $72 for sure. And then you look at the upper price targets we have. If that's the case, if we get above 72, I see really clear shot all the way up to even higher than that, going up to about 83, 84. But again, we have to take a little bit of time to let those things happen. Crude oil usually doesn't move as fast as Bitcoin does and drop 30% in a day. It's a little bit different move. So anyway, that's my take on it, Ethan. I think that you got to be a little bit careful here with crude oil. It's a defining moment for sure if we look at that daily, right? It's been building and building and building strength. It just hasn't had enough strength to break above that ceiling. It feels to me like it wants to go through that ceiling. What I expect to happen is I actually feel like you're going to get it to a breakdown, let's say to $60, and then it'll rip back up, and it's going to head fake and push a bunch of people out of the short trade. So it'll get people short, it'll stop them out, and then all of a sudden rip to the upside. And I think that's the time that you'll look to be buying it. But market loves to do head fakes, especially people with a lot more money than me. They can manipulate the markets. I can't. Okay, I think this is the last one. Yep, I got last one that's been sent in. How am I doing on time? Holy cow, I'm already almost out of time. So here's the last one that was sent in. Thoughts on Snapchat, please. Of course, Rachel, I am not a fan of Snapchat. I don't use Snapchat. I had some shorts last year and got burned on those, so we took some losses on Snapchat. I look at this the same way I've looked at several of these other asset classes. It's just been traversing sideways, and it looks weak. We still have an unfilled gap, which I thought we were going to fill a while back, and it hasn't happened. But this low right around 48 bucks. If we get a close below 48, and granted, it's at 53.91 right now, but if we get a close below 48, there's this gap down here that was on an earnings play, and it is massive. All right, the gap started at, let me go up to the exact numbers. It gapped up one day, called to, I'm going to round up and say 35 bucks, but it started way back here at about 28 bucks. So we jumped from 28 to 35, and it's just been pretty much uptrend ever since. And now all of a sudden starting to show some weakness. Gosh, I do this all the time. Thank you guys. I'm slacking over here. Sue, I need an award for telling me twice. There's your chart of Snap. I mean, again, what I'm looking for, what I want to be, whether I'm long or short, I want to be in something that's got a strong trend. And I don't feel like Snapchat has that right now. I don't know what would cause Snapchat to all of a sudden fuel and spike to the upside here. But right now you're at $53.91. You're holding that line at $48.14. If you get a close below that, and I would drop it down and say a close below $48, then I think you have a real shot at closing that gap, because it feels like it's been held up here for quite some time. Thanks, Tibor. See, Tibor, this is why I love having like TJ on the program, because TJ, my old chart master, he used to do all the switching for me, but I'm doing everything now, so you gotta give me a little break. It's been a really crazy day, but yes, I messed it up. I'm sorry for that one. So that's my thoughts on Snapchat, Rachel. I'm not a fan of it right now. Could you be buying at 48 bucks when it comes down there and play the bounce? Sure, absolutely. Just make sure that you do have a stop loss in place, because I do think that if you get below $48, that there's going to be an accelerated move to the south side. Pins is another one with a large gap, PINS. Okay. Oh yeah, and a couple of them, right? You actually had the gaps fill. And there's a few gaps on this one. I remember this. Yeah, this first one filled. Normally, this is what I think happens. Way back here on the November gap up, it filled it within 2 weeks, and that's what I was anticipating happening with Snapchat the first time I shorted it. Now you look, and I'll highlight some gaps here. We'll just draw those lines in. Here's, you got a nice gap fill. Got to go to drawing tools. And yes, I have my charts up, Tibor. My charts are up this time. I didn't mess up. There's one gap that needs to be filled. That's a big one. And then there's a much bigger one down lower. You can see going all the way back into August. And then these are all earnings announcements, guys. Typically, these companies are bouncing all over the place with regards to earnings. But look at the size of those gaps. The yellow box there tells you the magnitude of them. Neither one of those gaps has been filled. Clearly, the trajectory on Pinterest right now is to the south side. And there's a new unfilled gap formed up top. You guys see this one happen right here. Here's an unfilled gap on it to the upside. So if we do get a bounce, that's an area where I'd be thinking it might go up, bounce up too, just because of the magnetism of gaps. But there we go. So there's Pinterest. Well, what makes you stay in VIH? You said you don't like the app. I don't like the app. I don't like the chart. I almost feel like I'm hoping that somebody does a class action lawsuit against them, because what they did was almost a bait and switch. These guys were clearly talking about being an exchange and talking about institutional order flow running through their apps. That had me really attracted to it. And then all of a sudden, like, oh no, we're just an app that you can use at Starbucks. Like, that's absolute lies. So, this was, as I mentioned early on with SPACs. This is the danger of SPACs, right? They probably overpaid, as I think a lot of SPACs are doing. And remember how the SPACs work, right? They have a blank check. They can do whatever they want, and basically their goal is to go out and buy companies. They don't really care what price they pay because they already have the share. So if they can inflate that share price as much as possible, great. So I'll go out and I will go buy some company. I'll overpay them. So now my shares are going to be worth a lot more. I cash out and those shares just end up falling. And I think that's one of the dangers of SPACs that many people are referencing, right? Are looking at a chart like VIH and saying, look, these guys in a small window of time, and this is that transition right here. It goes back to April 13th. It was looking okay. And then all of a sudden they're like, oh, here's our app. And everyone's going, wait a second. Wait, hold on a second. You were not supposed to be an app. I can buy Starbucks. You were supposed to be a institutional exchange. That was your initial talk track. So I don't know. I feel like it's a bait and switch on these guys. I'm obviously pretty pissed off, but it is what it is. At this point for me, I'm just going to stick with it for the long haul. I only have 1,000 shares, so it's not that big of a deal for me. Okay. Yes, Tibor. I got it right. I actually used to work with a Tibor. Great guy. Let's see. I'm looking for question marks. I'm just scrolling up and looking at question marks in case I missed stuff. And I'm sure there was plenty of chat. What about trend and fundamentals? Brendan says, what about trends in fundamentals? Yes, I think that there's obviously trends in fundamentals. And this is where somebody like Colin Teddards, you guys may have seen him on this program. Check out the Investor channel on YouTube. He puts out a lot of amazing content, and that's kind of what he's looking at. He's looking at trends in fundamentals. Are the different growth metrics increasing? Are they decreasing? Where are the big changes happening? To me, I'm just lazy. It's way above my head. I don't want to spend the time going through balance sheets and checking price book ratios. I don't know. I have a finance degree, but I just feel like I don't want to call myself lazy. It's just if I can look at a price chart, I'd much rather trade off what I can see than analyze and hope that the CFO didn't lie to me there. Remember, you can lie on a balance sheet for a long time. If you don't believe me, then just check out what happened to Enron and WorldCom. These were lies on balance sheets for a long time, and ultimately they got crushed. So I'd rather trust a price chart and make sure I use stop losses. All right, what else do I got here? Look for question marks. If you got them, send them on in here because I'm just about done. Oh, wow. You guys got some pretty active chat today. Yeah. I'm glad you got stopped at too, Brendan. Stop losses are critical for everybody. And with something like this, there really isn't much that you could have done on VIH, even if you had a stop loss. It was moving so fast back in the beginning of April. Right now, it just looks like slow death. And I'm hoping that something transpires. I'm hoping that BACT actually starts to step up their game a little bit and says, we are going to do institutional because that was the initial promise. And that, to me, would have been one of the bellwethers out there that I'd be looking for. Batista says, fundamentals are dead in this market. I would tend to agree with you. But if we get a market implosion, which I think is it's in the future, who knows when, is 2023 going to be that year that we see the markets absolutely implode and melt down? If it does happen, what should for all of us happen is if things drop 30, well, not 30, let's say 50, 60, 70%, as they could happen if there's all these bubbles implode at once, then there will be a point where you're going to need to go, let me check out the fundamentals. And I'll be a deep value buyer here because a lot of these companies are going to do very well, but they just get caught up in that knee-jerk reaction where things get so beaten down. I mean, you look at what happened in the financial crisis. I mean, Citigroup was trading at like $1, $2 or something. Same with Wells Fargo and Bank of America. I mean, these are companies that aren't going to go away. Were unbelievable discounts, and the list was huge of potential buying opportunities, especially if you're looking at strong fundamental value plays and looking at some of the fundamental ratios. It's still beyond me, but when these markets do crash and just die, I'll have Colin Teddards on the program like once a week so we can find out where he sees the good value. I'll let him do the big legwork. We just give him shout outs to Colin. Let's see. Eric says, when trading hammers or shooting stars, where would you place your stop after breaking through it? Yeah, that's a real tough one. Ugh. That's a great question. So let's answer that question, and I'm going to take that as one of the last ones, just because I got to get out and do some other stuff here. Let's see. I think we had on the S&P. So let's go with the SPY, or sorry, S&P futures, just as an example. Actually, you know what? Let me go out and see through my filter. Was there anything today that formed a nice little hammer formation? Since you guys know I like to do scans every day. And there we go. And I'm going through. At least I have my chart up this time, so you guys don't give me a hard time. So these are all companies that have hammer formations today. There's 59 companies that have hammer formations forming today. So let me just go see if I like any of these as potential plays. So I'm going to run through the list here. I'm going to do it rather quickly, just for sake of discussion. I don't want to spend too much time trying to find one that looks great. I mean, just because it's a hammer doesn't necessarily mean it's a trading opportunity. So I'm looking for a specific setup here that might give me a little bit better probability of that hammer working out. So I'm going through. We got Zion Bancorp, USB. Okay, let's look at USB, US Bancorp. So to the question that Eric posed, which is a great question, and thanks, Eric, for participating today. I appreciate it. The only reason I like this one is if you notice, the tail on today's hammer formation came right down into these most recent lows, which it's tapped into a couple times. It's still making higher highs. The lows, it's still making higher lows, but today it tapped down this bottom. So the question is, how would you trade this one? And this is where you have to define your appetite for risk, because my rule is if it opens up anywhere between these two horizontal black lines, that's $59.17 to $60.32. If it opens up in there, then I'm going to be waiting to go long. If it moves up above 60.32, that's my long entry. But you notice if I'm buying long at 60.32, my stop loss should be somewhere down below the tail of that thing, which actually is right here at 59.13. So am I willing to risk $1.20 per share on USB to take this trade? Well, what's my reward? Well, if your initial reward is going to be up here at where this market started to fall apart, or where it fell apart yesterday at 62.19, that means I'm trying to make $1.80 and I'm risking $1.20. Not good, right? It's one of those that's not a real great ratio. So I may actually go down here and whittle down to a smaller time frame, let's say, 60 minute, and see, is there a level that formed today that I might be able to move my stop loss up. So maybe you end up moving your stop loss up to, below the low of this hourly candle. I would wait and see what happens tomorrow morning before I make that opinion. But I'm not a fan of this specific setup just because the reward isn't there for me. Now, of course, we're looking at this on a daily time frame. If I went out to a weekly, I might be able to see some levels that are a little bit higher up. Not really. Jeez, what a huge move on US Bancorp. So yeah, I wouldn't take this trade, even though on the daily it's got a great hammer. It looks nice into a demand zone. My profit potential, again, is only $1.80, but I'm risking $1.20. To your point, Eric, could I go through a lower time frame? Yes. And what I would do is I would check that lower time frame tomorrow once the market opened up and say, okay, as long as we open up in this range between these two black lines, that's 59.13 and 60.32, then I'll check it out. If it starts to form a level tomorrow in this zone that's a bit higher up, let's say all of a sudden it starts to consolidate around 59.70, well, now I'm looking at 60 cents worth of risk for $1.80 worth of profit. Okay, I'll make that trade, right? So it's tough to make that call because I know sometimes these tails are so far away that you have to take on a lot more risk if you're going to incorporate the full candle, right? It's a bit challenging at times. How have the short trades been last year? Mine, personally, not very good. My short trades have not been that good this year, or the last year. Chart saves time versus fundamentals. I agree with you, Paul. I absolutely agree. All right, if you get any last minute questions, feel free to type those on in. I will see if I can get to the last minute couple here, and I'm going to at least go through 4 different markets here and show you the fundamentals that happened today. There is a bunch that's still going to come out tonight. So this is your economic calendar that happened today. Most of the stuff was fairly good. You see that the CPI numbers for Canada rose, which, shocking, shows more inflation than they anticipated, but no reaction there. Crude oil inventories were a little bit less than expected. I was kind of surprised to see the sell-off in crude oil based off of that, but ain't no big deal. And then you see we have unemployment rate coming out for Australia, so anybody who's trading that AUD might want to be careful. We've seen a lot of chop recently in that Australian dollar, really been traversing sideways for about a month now, and it's sitting right near some support. So that may push it down lower if they get a pretty bad unemployment number. On the earnings front, this is what happened today. Pretty much beats across the board. Everybody that you see here beat earnings. That's TJ Maxx, that's Lowe's, Target, JD.com, Cisco as well. Although Cisco, even though everybody beat, Cisco was down 6%, Lowe's was down 1%, TJ Maxx was down 5%. Kind of interesting to see some of these big beats, and they did not quite do so well on price action. That was today. For tomorrow, I do have some economic announcements and earnings calendar information. Here's your economic calendar. It's really a couple good announcements for the U.S. The one to pay attention to is going to be at 5:30 in the morning. That's an hour before the markets open. That will be the unemployment claims there. It's been dropping. The expectation is it's going to continue to drop. And, you know, I apologize if you know, for someone who's just on unemployment, but I am really hoping that they take away all the extra stimulus for unemployment benefits. Let's get people back to work. The evidence is clear. There's tons of jobs out there, but people are just being really lazy right now and not wanting to go back to work. Let's get them back to work and get this economy back on track and really humming. So unemployment claims come out at 5:30 in the morning. You can see we also have the Philly Fed Manufacturing Index, which manufacturing is key. There's a ton of manufacturing data this week, especially on Friday. For the U.S., you also have natural gas storage. And then with regards to other markets, you do have Japan with the flash manufacturing numbers, Aussie with the retail sales, and British pound with retail sales happening tomorrow night. Finally, your earnings calendar for mañana. You see Applied Materials, you got Canadian Solar, Palo Alto Networks, Kohl's, and Ross Stores. Keep in mind, almost every retailer blew out earnings, so I'm kind of expecting that to happen from Kohl's and Ross Stores tomorrow. We'll keep your eye on that price action as well. Let's see. ISO Dude, future or Forex courses at OTA for newbie who want to start with a small account. You know, there's obviously courses are available there for anybody with any account. You know, the challenge is sometimes if you have a small account, then you have to pay a good amount of money for the education. It's about what do you want to accomplish out of it. I still work for Online Trading Academy, so for me, I wouldn't be there if I didn't believe in the content. I think they have great content. I think what really separates the Online Trading Academy from anybody else is the community and the support. So all the different trade rooms, all the different what do they call it? Guided practice sessions where you're actually going out in the market with a mentor and kind of saying, hey, walk me through this process. How do I apply core strategy? So I think education certainly is going to benefit you, so it's just a question of what you can afford, you know. And of course, there's always different plans out there, but I'm biased with that regard. Brendan says, when you can fudge 80% of COVID deaths with incorrectly calibrating I'm not going down the conspiracy route of that this data was all fudged. I'm just here to trade the markets as they present opportunities to me. Okay, I don't see any more questions specifically coming into me, so I will wrap things up. For those that are new, hit that subscribe button. You know, I do this show just about every single day. I will not have a show on Friday, that said, because I'm going to be in some meetings regarding building a cryptocurrency class I can't get out of, so I'll be doing that. I'm going to have John Rowland on the program tomorrow, which should be pretty fun. John, as you guys know, is kind of a wild guy. He's got some great stories, and I wanted to have kind of a fun show that allows you guys to see what goes on behind the scenes. So we'll talk about what John did. Like when he walked in, what was the first thing he would look at as a floor trader out there? What sort of things was he looking for? What was he looking at? Price charts? Was he looking at his guy standing next to him that worked for a different firm? How did it all work back then? I think it'll be some fun, crazy stories. We'll try to keep it PG-13 for everybody out there, but that's going to be my guest for tomorrow. You can find out more information about John Rowland by, you can go on social media to find out, but he traded on the New York Mercantile Exchange for quite some time. So if you have questions, send them on in, TraderMerlin@gmail.com. That's the name on the screen there. If you have questions, feedback, you want us to cover something specific tomorrow, or if you have something you just want me to cover on this show, I thrive off of listener questions, so send them on in at TraderMerlin@gmail.com or comment down below the YouTube videos. That always helps as well. So if you like the show, give me a little thumbs up. Until then, happy trading, everybody. Buy the dip. I'll see you tomorrow. Take care.